Hello ladies and gentlemen, my name is Daniel Abok and today we'll be covering the topic balance sheets. So I'll jump straight to it. So in a balance sheet you find assets, you find capital, and finally you find liabilities. Under assets you find something like cash, for example. Under capital you find the owners, and under liabilities you find something like loan. So when you start a business you have 0 there, 0 there, and 0 as loan. It's a clean record. So the owners decide to put into the business 1,000 worth of value. So 1,000. So they put in cash. So for this to be a complete record, we show that the money came from the owners. So record where the value came from as 1,000 and a capital, and where it ended up as assets and a cash. The owners decide they additionally need more cash, so they take a loan worth 1,000 again. So 1,000. So if they take loan worth 1,000, then we have an extra 1,000 as cash. So in this case, we have total assets as 2,000 and the total contribution of those assets as 2,000. That's a complete record, a neat record. In accounting, that's a complete record. And the confirmation is the fact that the contributions are 2,000 and the assets where they ended up as are 2,000. So assume you, under operations, you decide to buy inventory worth 500. So if we didn't record where the money to buy, where this value of 500 came from for us in order for us to buy the inventory worth 500, then our total assets would read 2,500. Yet our contributions for the assets still remained as 2,000 in total. So that imbalance shows that there's a problem with our recording, or there's a problem in the integrity of our records. So the right way would have been to record where the value came from for us to be able to purchase the 500. So we had to reduce our cash by 500 for us to be able to get the inventory worth 500. So this one returns the balance, returns the assets still remain as 2,000, which balances with where the value came from, or the value contributors as capital plus liabilities, which is 2,000. In this case, if accounting is basically value tracking, then a balance sheet is then a balance sheet confirms the record quality and completeness. So that would be my parting shot. If accounting is value tracking, then the balance sheet confirms the record quality and completeness. This is one of the reasons we built Kidafrari the way we did. Every operational event should leave a complete and traceable record of how value moved through the business. That marks the end of my lesson on balance sheets, and I hope to see you on the next one. Thank you.